Good day guys, this is Paul here, and I'm making this video as an introductory guide to futures trading on Binance. So yeah, the first thing you need to do is to have a Binance account. You can create an account on Binance.com, or if you don't have an account, I'll drop the link. You'll find it in the description below. And yeah, so I do hope you already have an account. So the first thing you do need to know about futures trading is the interface. Okay, so right here on your mobile device, when you check it out, you see these stuff. So you see your home page, you see market, you see trade, you see futures, and then you see your wallet. Okay, so the first thing, like I said, you need to be introduced to the interface of futures trading. So currently here's futures. Here's the futures interface, and here's how it looks like. It can be like it can be confusing at first, especially if you don't understand how to use the interface. So you can watch more videos on how to make use of Binance, but this is the interface, and so I'll be explaining it here. Okay, so yeah, the first thing you need to know is that here we have the cryptocurrencies. Okay, we have perpetual here. Okay, these are perpetual contracts. So the thing about futures is that we have quarterly contracts, and then that is contracts that expire, like delivery here. These are quarterly contracts. We have quarterly contracts. Those are contracts that expire, and then we have perpetual contracts. That is contracts that you can open forever. Okay, that they don't get closed unless you close them, or maybe you get liquidated. Okay, so now for instance, now this delivery here, it's USDT quarterly. That is, you'll be betting on the price of Ethereum every 4 months. Same thing with BTC USDT here. That is, we betting on the price of BTC every 4 months. Okay, and then the next time that if you are using this ETH USDT quarterly, the next time this contract is going to close is 12/31. That is 31st of December 2021 currently, so at the time of this video. And then our BTC USDT will be closing, this contract will be closing 31st of December too. So this is currently 16th. We are currently on we are currently at today's date is 16th October 2021. And then yeah, so these are delivery contracts, that is the expire, and these are perpetual contracts too. So if you want to search for a perpetual contract, you can use ETH USDT perpetual. Okay, the perpetual is what we'll be trading. And then another thing to notice that this USDSM or coin M, this USDS means US dollar stable coin. Okay, the S stands for stable coin, and then the coin M2. This means if you are going to be trading, you'll be using another coin as your collateral for the trades. While in USDA, it will either be against the USDT, or the that is the USD Theta USD, or the BUSD, against the BUSD, which is the Binance US dollar. Okay, those are stable coins. So one thing I need to explain about the USDS M and coin M is that in the USDS, like I said, you'll be using stable coins as collateral, and then in CoinM you'll be using cryptocurrencies as collateral. For instance, now you can use BTC as collateral, but for me, I don't use CoinM. Okay, because like for instance, if you use if you use BTC as a collateral, and then the price of BTC drops, you'll be in a short, like you most likely be in a losing position. Okay, compared to when you have a stable coin, which will actually give you a much more stable entry. Okay, or a much more stable position, because like stable coins are less volatile compared to cryptocurrencies. So what I need to do here, you need to fund your USDS contract or your wallet. But I need to explain more about the interface. So if you want to search for cryptocurrencies that you want to trade, you have you have those under this feature here. So for instance, now if I still want to trade the BNB USDT, I'll just search for BNB. You see, I can either choose the BNB USDT perpetual, or the BNB BUSD. Let me search for BNB again. So you can see BNB USDT or BNB BUSD, you can see they have the same price. That they are both stable coins. Okay, so I'll be choosing the BNB USDT. So there we'll be taken to the interface here, and then another thing to know is that buy slash long, this buy slash long option, or this sell slash short. So one thing to know about futures trading is that it's different to sports trading, in the sense that when it comes to sports trading, you buy the asset and hold it actually. But when it comes to futures, if it's futures, you don't actually buy the assets, you don't own the assets. You are basically betting on the price. Okay, you are speculating on the price, you are not holding the real assets. It's just like betting on the future price of an asset, and then when it's time for you to close it, then you either go out with your profits or with your loss. You are not really holding the assets. You are basically betting here when it comes to futures trading too. So here you long and then you short, but in futures, in sports trading you buy. Okay, but in futures you long or short. So what you're gonna do from here, I hope you firstly, for you to know this stuff, you need to, I hope you are familiar with technical analysis. For you to trade futures, you need to be knowledgeable on technical analysis. Okay, so don't go into futures trading if you are not knowledgeable on technical analysis. You will lose a lot of money. So yeah, another thing I need to explain to you is that this is the chart. I hope you know that this is the chart. This is the order book. Okay, let me just take this off right here. This is the order book. That is the sell bid and ask prices. That is sell trades, and then short trades, and then long trades too. So you can see from here too, and here is where we have our futures isolated. You can see isolated here. You can see a leverage here. So I'll explain all this in a minute. So like I said, this is isolated. You can choose isolated, or you can choose your cross. So let me explain those to you. So now when it comes to isolated, in isolated margin mode, you can that is your collateral, the collateral you'll be using for the trade, you can specify it. Okay, that is, you can budget the exact amount you want to risk on the trade. You can budget the exact amount you want to risk on a position, that is per trade. But when it comes to cross margin mode, you'll be using the entire collateral you have. You'll be using the entire assets you have in your wallet, in your futures wallet, as collateral for the trade. So the thing is that cross trading extends your liquidation price, while isolated trading will it brings it much more closer. Okay, so but for more for for emphasis on risk management, you need to use isolated. I recommend isolated for you, so you don't so you don't so you don't lose all your wallet balance. Okay, but when it comes to cross, like I said, you'll be using your entire portfolio, you'll be using everything in your portfolio as collateral for the trade. So yeah, so that's, and when it comes to leverage too, so the thing about leverage is that leverage increases the size of your position. Okay, leverage is just like increasing the odds or your chances. It increases the odds in your position. Okay, so if for instance, let's say I'm opening a $100 position on BNB USDT, and I'm using a 5x leverage. That means my buying power or my selling power is 5 times more, which is $500. If I'm using 10x, if I'm using if I'm using a 10x, that means my $100 position is currently worth $1,000. Okay, so if BNB moves 10%, that means I'll make 10% of $1,000, which is $100. Same with if it increases, if it decreases by 10% too, that means you get I lose I lose 10% of my wallet balance too. So like I said, your leverage increases your profits, at the same time too it decreases your profits like insanely. Okay, so leverage, if like I said, if you are leveraging with if you are leveraging with 10x, 10x is actually a lot for you as a beginner. You can see I'm selecting high leverage increases your liquidation risk. Okay, so 15x, 20x, 45x, 60x, these are actually crazy leverages. Okay, so I won't recommend those for you. So what I advise you to stick with is like, you can, the max I'll advise you go with is like 5x. Okay, this is not a financial advice, of course, but for risk management purposes, don't go more than 5x. Okay, like I said, if you are going 5x, if you are risking $100 and you are using 5x, if you get if BNB moves 10%, that is 5 times 10. Okay, that is 500. All right, I hope you understand that too. So leverage just increases your size. It increases your size. So and yeah, what else? And then we have limits, we have markets, we have post only. These are the types of orders. Okay, so limits here, I hope you are familiar with this on sports trading. So you should actually know this if you use sports trading a lot. Okay, so this shouldn't be new to you. Limit simply means you will place in a future price. Okay, so for instance, now let's say BNB's current price is 477.92. So if I'll be placing a limit order, let's say I want to buy BNB when it dips to let's say I want to buy BNB when it dips to this area. At my limit size, I'll put that is 473.11. At limit, I'll put 473.11. Okay, so that means I'll be buying BNB when it gets to 473.11. Okay, so my size here, the max size I can go here currently, you can see is for long, buying is 0.81. That's if I'm using a 5x. Okay, so let's see, let me just use 25%. Okay, so size here, that is 25%, which is like 0.20. So that means I'll be buying 0.20. I'll be long what, no, 0.20 worth of BNB at 473, and then I go long. Okay, so that is if I choose that currently, let me toggle that off. So now it will cost me, you can see that will cost me 19.34 USDT. That's the price. Okay, so if I go long here, you can see order submitted. Then I'll check it out on my order book here and order history here. So I open orders here, we have positions here, open orders, order history, trade history, transaction history, and assets. So you can see I have my limits here. So my buy position will get triggered at 473.11. Okay, so once price gets to 473.11, my BNB order will get filled. Okay, so that's what limit order is. And then markets, when it comes to market order, I won't be with market order here, you are not going to be selecting a price. It's just take you in directly. Okay, let's say I want to short here, I'll just choose let's say I'm going with 25 here, cost 14 USDT, and then I just sell short here. It will take me straight up. Okay, market order field, you can see it's filled entirely. So my position, so this is my position. Okay, so this is my position currently. So I'm just using it as an instance for you guys. And then you can also use if you are yet to fund the wallet, you can do that through your wallet section here. So what you do is once you fund your Bitcoin wallet here, what you do is you transfer. Okay, transfer assets. You transfer from fiat and spot here to USD SM futures, because that's what we'll be using. So transferring USDT. Do I have USDT? Oh, okay, I have 0.1. So I need to do you can transfer your USDT. So all I need to do basically is to buy USDT on spot. I think I have ETH in my wallet here. Okay, I think I got ETH here. Okay, 0.4. So I'll sell my ETH for USDT and then convert. So I hope you know how to do that. You basically transfer from your spot to futures wallet. So that's how it works too. And then some other stuffs too. So like I said, after you funded your futures balance here, you go to the futures section here. So let me summarize it again. We talked about the type of orders, which are limits, markets, stop limits, and then the others here, stop market trading, stop post only, swap, TWAP. Okay, and then like I explained earlier, limits is your it gives you a pending entry into the market. That is, you can set a future price at which you want to enter, and then markets gives you a direct entry into the markets. That is, your order gets executed instantly. And then your stop limits too. Your stop limits, you can utilize this order. You can utilize this order function as a stop loss. Okay, and then we also have other types of orders here. We have stop market, trading stop, like I said. So if you want to know about them, you can put your cursor on this question, or on this cautionary button here, so it gives you a brief explanation of it. So as I said, what you need to majorly are just the limits and markets orders. Okay, and then price, your size. Okay, the size at which you want to enter, so you can check the cost here. Okay, so your TP or SL2. So majorly, if you want to trade, what you need mostly for future entries is just your limit here, and then your TP and SL. Your TP is your take profits and stop loss price. Okay, so you need to enable that to it's advisable before you to enable that. So you have your take profits and then your stop loss price inside too. So with that too, after imputing these parameters here, then you can go long or you can go short, however you want to. So like I said, to the other book here, is just like an accounting section of the contracts that gives you that shows you the buy and sell orders, that is the long and short orders here. And then for leverage too, like I said, to your leverage increases your profitability, and at the same time too, it increases your losses too. Okay, if you over leverage, you can get liquidated like much quicker than you should. Okay, so that's why I said it's advisable to use leverage no more than 5%. Okay, don't exceed 5%. In fact, you can even go 1%. You can go to the smallest level here. You can just go directly. Okay, so you don't need to you can go without leverage. So 1x is just no leverage. Okay, so with that, I hope you actually understand this too. And like I said, if you are using leverage, your leverage increases your position size. Okay, it increases the size at which you'll be going into the market. And so with a huge size come with huge sizes come huge profits. At the same time, with huge sizes come huge losses too. So it's let's say you're going 5x here. If the market goes, if you have a margin of $100 and then you have 5x, that means your purchasing power or your selling power is $500. Okay, so if the market goes 10% in your direction, you make 10% of 500, which is $50. At the same time too, if it goes 10% and in the negative direction, you lose $50. Okay, you lose $50, which is 10% of $500. 10% of $500 is $50. Okay, so and that $50 will be deducted from your margin. So that's why it's actually not advisable to go beyond beyond a reasonable leverage too. So like I said, don't exceed 5x in your leverage. So or you can just go 1x. Okay, so yeah, I do hope you understand this too. So for you now to trade, you need to be knowledgeable on technical analysis. For you to trade these technical aspects here, you need to know about technical analysis too. So you don't just enter the market without a sense of direction or what to do exactly. So with this, I'll be explaining more on technical analysis and how to enter. If you want, you can make use of indicators. Okay, you can make use of indicators if you want to, but for me, I don't use indicators. I just trade pure price action here. So I'll be making more videos explaining how to trade futures, especially the technical parts later on. So I do hope you understand this too. So if you have more questions, you can send me a message regarding your question, and then you can also ask them in the comment section too. So I hope you understand this video. So Polala out. Bye.